Thanks for clicking! More than half of Canadians renewing their mortgages in 2025 expect their payments to rise, and more importantly, 80% of those are worried about it. This according to a new poll coming from Royal LePage. And to reiterate the point, the always entertaining Royal LePage CEO Phil Soper has done the math for us, telling the media that we're now 5 years from when those low-rate mortgages became available, and now they're rolling over. And that math does check out, though it's obviously going to come as a surprise to Phil Soper, who, as we've discussed before on this channel, told Bloomberg in October that renewal wave was just about finished.
3/4 of mortgages written during those pandemic lows will have rolled into post-pandemic rates by the end of 24.
And of course, Bloomberg just let him say it, no follow-up thereafter, no questioning that math, helping to pump the FOMO that there was nothing to worry about in the upcoming renewal wave.
I love you, Phil.
But better late than never, Phil Soper has now caught on to how math works and is painting a much more grim picture than he was prior. Which is concerning, as we saw on Wednesday, the Canadian Real Estate Association is as well.
I don't know if there's maybe people doing the math about being able to afford those.
Which I think is more the story of the day, that these two traditionally optimistic organizations have, within 2 days of each other, realized that the mortgage renewal wave could be a big problem, rather than Royal LePage finding out that 5 years after 2020 is 2025.
Why didn't you tell the rest of us?
So what I want to do today is go over the Royal LePage poll and take a look at some of the numbers on the mortgage renewal wave, take a look at some of the personal growth of Phil Soper, who is being uncharacteristically cautious, and then discuss some implications. As we'll see today, we now have Royal LePage sounding the alarm bell on the mortgage renewal wave, which is obviously concerning. We will continue to track how all of this plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this poll. Onto the poll. As mentioned, Royal LePage found that 57% of Canadians renewing this year expect their mortgage payments to rise. And of those renewing, 81% said those higher payments will put their household in financial strain. Given that 1.2 million mortgages are up for renewal this year, that means about 684,000 of respondents expect their mortgage payments to rise, and of those, 554,000 expect to experience financial strain.
Wow!
But let's delve a little bit deeper to see if it's actually as bad as it sounds, and if we do that, we find that 22% of respondents say that their monthly mortgage payment is set to increase significantly. 22% of 1.2 million, that's 264,000. Still not a great number, especially since a significant portion of them planned on reducing their spending to help cope. Not great news for the economy.
Buy a house?
With all of that said, let's briefly remember to take these polls with a grain of salt. Remember, it was almost a year ago to the day that Royal LePage released a poll saying that more than half of Sidelined homebuyers were waiting for rate cuts to jump into the market, and 51% of them would be flooding back in once the bank cut by 100 basis points or more. Or, according to Phil Soper's understanding of his own poll,
51% of consumers told us that when the Bank of Canada begins to lower rates, they would re-enter the market.
Which, of course, is 100% not what that poll said. The poll said that 27% of adults had been active in the market, half of which left the market, and 51% of that half that left would be entering when the bank cut rates. Which will do the math for Phil. 56% of 27 means that 15.2% of consumers, 51% of which were going to come back to the market, meaning about 8% of total consumers. Big difference from 50.
That's huge.
And of course that poll wasn't correct, as the Bank of Canada cut rates by 200 basis points, and we didn't see that major flood of buyers come back to the market. In fact, sales numbers have been sluggish for the past few months. And I bring up last year's poll for two reasons. First, take these numbers with a grain of salt. This was an online poll, as was last year's, which means it's representative of people who take online polls, not of Canadians at large. And second, as a means of demonstrating Phil Soper's personal growth, to go from that mischaracterization of his own poll in January of last year, to denying that the renewal wave was even a thing as late as October of 2024.
What effect will that have on the housing market when they have to, as they renew at a much higher interest rate?
Yeah, much less than some would lead you to believe. We're over halfway.
to this year even commissioning the poll in the first place, and then noting the pressure that this renewal wave will be putting on household finances, which isn't going to induce any buyer to jump into the market. If anything, it's more likely to make buyers wait this out, as they could very well expect some distressed selling coming over the next year or two. And that's very strange coming from Royal LePage, and it's even more strange coming the day after CREA economist Sean Cathcart said very much the same thing.
Mortgage rates were at record lows, and so a lot of those are going to be renewing starting this summer and over the next couple of years. I don't know if there's maybe people doing the math about being able to afford those.
And it's just very out of character to have both of them, the CREA Sean Cathcart and Royal LePage CEO Phil Soper, warning about the remortgage renewal wave within 2 days, both of whom have been spewing non-stop.
Don't do it!
Both of whom have exhibited a pronounced degree of optimism regarding market resurgence, despite the presence of contradictory empirical data.
That's better.
And these worries about the mortgage renewal wave are probably not without merit. If you remember back in June of 2024, we went over the numbers, taking a look at how much the average payment would probably rise if interest rates were at 4% in 25, which indeed they are. And we found that payments started to increase in February of 25, moving up to 15% by June and continuing to rise all the way up until January of 2026. So yeah, as we found last year, and now being backed up by Royal LePage and the Canadian Real Estate Association, these mortgage renewal payments could very well be problematic and are a concern for those Canadians renewing this year, and probably next. And it's not just the renewal wave that has Phil Soper being cautious. When discussing options available for those renewing, Soper said borrowers may want to look at variable as interest rates are declining, which definitely isn't new. He suggested that young people take a look at variable rate mortgages back in the summer of 2021, when interest rates had nowhere to go but up.
Could go either way.
But this time, he added a caveat, noting that ultimately, Canadians should choose the mortgage product that best suits their financial goals and risk tolerance, which, acknowledging the risk tolerance that in paying for the biggest financial purchase of your life, you may want to consider your risk tolerance, that's a big step for Phil Soper. So, first on Wednesday, we had the Canadian Real Estate Association's Sean Cathcart noting that the mortgage renewal wave worries over the increase in payments may be pushing more sellers to list their home, flooding the market with new listings. And now we have Royal LePage releasing a poll the day after, showing that a large portion of Canadians, at least 35%, are extremely worried about the financial strain that is to come when those payments do increase. I had made the joke in a previous video that the CREA and Royal LePage should be coordinating their messaging at galas, but I didn't think that coordination would come so soon. Now, I'm not going to engage in any wild speculation as to why the CREA and Royal LePage now have this apparent anti-market messaging heading into the spring market, but it is very, very odd. Not what you would expect from these two organizations heading into a market that, at least for now, looks like it is stalling. With that said, we will obviously continue to track anything that does come out of these two organizations as this all plays out. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.